Because in practice, that's also where validators have been able to make a lot of money, is when all the numbers are they're just complicated.
Do you think that there is a specific infrastructure architecture that is ideal for CLOBs? I think there's like 4 options, more or less.
It may be implementing more of like a ZK bridge kind of thing. If that tech just becomes commoditized, then Hyperliquid should just like slap it on there. That's what they should use.
Welcome back to the Rollup. We are your hosts. I'm Andy.
I'm Robbie, and this is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy a quick word from some of our awesome partners who make this show possible.
Crypto UX? Broken. AI? Can't trust it. Let Magic Newton set you free. It puts your on-chain transactions on autopilot. Does all the work for you 24/7 so you can go do what you want. The vision of Magic Labs, the creators of embedded wallets, used and backed by the best. See for yourself. Simpler crypto UX, verifiable AI agents. Newton.xyz.
Introducing Asset Runes, the future of decentralized finance. Stablecoins natively on Bitcoin. Hedge against volatility. Diversify your portfolio. All directly from your Bitcoin wallet. Secured by ZK technology. This is Asset Runes. Available now, exclusively on Starknet.
What's going on, man? How are you?
Good, man.
Totally day 3. Yeah, I'm enjoying. That panel was pretty funny. We had some funny people on our panel, that's for sure.
Doing anything with Max and Tarun is always gonna be fun for me. That's always sure to be a good time. Or it was fun.
You know that like Soul ETH debate that we had in Bangkok together with Tarun at the studio.
Yeah.
That was a good one.
Yeah.
Yeah, it's fun stuff. Well, okay, so I've been talking to Hasib and then Alton earlier today about this state of the proof of stake landscape with these L1s, and I had Tarun yesterday say that he thinks that staking businesses, the top is behind us for staking businesses. Do you agree with that?
Yes, I do. I'm curious.
Like validators.
Well, so I'm curious what the other guys' takes on this were, because I was at a dinner with Hasib the other day too, and he was like sort of on the same side that I've talked about before. Like most of this economic security stuff is like a lot of this is a meme.
Yeah.
So I think a lot of it is topped. A lot of the staking businesses, at least in some sense, where I think a lot of it is just unsustainably profitable right now. Like if you look at the breakdown of particularly on Solana, the amount of money that validators in the past year have made on Solana is just like absolutely ridiculous. So there in particular, I would say just as like a margins business, I would say it's probably topped. Because it's just been like a super inefficient market where, for example, it was just like the norm for a super long time that the validators have just been like keeping all the priority fees on Solana.
Yeah.
Which was a thing that like no one paid attention to early on when this was a small market and people weren't making money. But as these markets have gotten really big, and just the options for you to stake with different providers has gotten so much easier to move capital around, like you just start negotiating with people. I mean, like we did that with our stake, where early on with our Sol stake, we didn't really care where it was staked as much, because it didn't make a difference. The provider that we were staking with did not give priority fees, so we moved our stakes once it started moving up. And then you start negotiating with people, margins compress. So that's going to happen industry wide. Just as the industry will get bigger, proof of stake assets will get bigger, the dollars amount staked will get bigger. But a lot of the businesses today are definitely going to get squeezed on margins. Where I mean, Coinbase taking what, I don't know, 25% on like retail staking and stuff like that. Like you just can't keep doing that long term. It's not sustainable. As you get better options and you lose your moat.
Even on on like the Kepler dashboard for Tendermint chains, on you had validators that would take 10-15%, some would 5, and some would have 0. And I guess for some perceived uptime or some perceived lack of slashing or security reasons, but it always baffled me how much capital would be parked into like these validators that are taking 10% commission.
Exactly.
I was like, why? Like how is they're all running the same hardware and software. Like it's like there's no difference here.
Yeah, we're going to see compression from both sides, where just from a user perspective, as just staking options get better in general, where there's more options to stake, there's more competitive market, and more people will get rational over time. I think as the field institutionalizes, more people will just, actually care about what are the margins and stake elsewhere.
Yeah.
And then we're also going to see pressure, I think, from the chain side, where this is in practice part of why chains are starting to make an aggressive push finally of, hey, we don't need 10% staking rewards. Like, this doesn't make any sense.
Yeah.
Hyperliquid has, I think it's like,
2%.
yeah, it's like a 2% staking yield. It's like 1% inflation. Like,
I've been staking for
and
like 7 months, and I'm like, dude, I barely heard anything.
exactly. Like, it works fine. No one's gonna like attack the chain. You don't need 100% staking. Like, most of that stuff is a meme. So people are just gonna keep bringing their staking rewards down.
Yeah.
I mean, you saw the push on Solana for the same reason. There is the push there. That didn't pass in part because I think they tried to get a little too cute and complicated with the mechanism.
Yeah.
But there's very clear appetite for, hey, what if we just like cut the issuance rate in half?
Yeah.
And then Celestia's proposal now
Was all the way down
for the extreme version of what I had talked about a couple of years ago of maybe just get rid of this thing and just proof of governance, just slash the staking issuance all the way down to effectively what is 100% commission of we need to pay enough to the validators to service the chain, and just like make it very transparent that these are the economics. Because in practice, that's also where validators have been able to make a lot of money, is when all the numbers are they're just complicated to users. There's a bunch of issuance, there's a bunch of priority fees, there's MEV. When the more complicated things are, usually the easier it is as one of these businesses to sort of skim off larger pieces. When you make it really transparent of, hey, here's the amount of issuance that we are coming out of the chain, and this is exactly what's going to pay for validators. It's very transparent. You negotiate that very clearly. And you're not going to get these crazy margins anymore, because most chains are realizing like this is just a waste of money. Like, we're paying out a bunch of inflation where it makes it easier for validators to take an unduly large cut.
Yeah.
And then most of the rest is inflation. We don't actually need to send back to stakers. It's excessive. It's inefficient on like all the tax inefficiencies and stuff like that.
Yeah.
So I definitely think we're going to see this push going forward of like a compression of margins there and a lot of reduction in staking rates.
So hypothetical, if you were Tolly and you were like running the Solana Foundation, Lily, Tolly, etc., what would you do immediately to address the application versus validator profit maximization imbalance from with regard to the actual MEV situation and applications really giving a lot of value back to the chain? What would you immediately do?
So part of the validator profitability thing is separate from the app profitability of like a lot of currently most of the value that the validators are taking now, at least the way that things are currently constructed today, should be going to validators, in that like a lot of these priority fees where they're taking crazy margins, those should be going to those should be going to stakers today, as opposed to like, P2P or whoever, or Coinbase, like taking those. That should be going to me as like a sole staker.
Right.
So I think that's the first step, is improving that. And that's a lot of just, reduce the inflation, just make better options for people to stake, make it easier for people to stake. And then like the margins will compress there. What you really need to do though, is also start to squeeze out the sole stakers to that point of helping the applications where, okay, but these, a lot of these excessive fees, the MEV and stuff like that, we don't even want that to leak to the sole holders or the validators. We want that to go return to the applications. And that's part of what we were talking about on the panel yesterday, like with Max. And this is where a lot of the application specific sequencing type of talk comes in, because I do think that is going to matter a lot. That's the more probably like existential risk of, if applications are saying, hey, half of the value that I create as an application is just leaking out to the sole stakers and validators because there's just like an inefficient market structure here and I can't capture it well.
Yeah.
Like I'm going to leave at some point. Like, why run a 50% margin business on Solana if I can go make my own app chain and get 100%?
Yeah.
That obviously won't make sense for small ones, but at a certain point, I mean, this is the conversation that everyone has always with Hall Fund, for example, where I don't think it makes sense for them today, but is there a breaking point in the future where if they're saying like, hey, we're, leaking out, just making up a number, 30, 40%, whatever of the value is, if we own the users, at a certain point, it does become rational to go do your own thing.
Yeah.
I don't think it makes sense today. There's a lot of value to the distribution and the infrastructure. It's expensive to build it. But yeah, at a certain point, you're going to need to expose better mechanisms for these applications to re-internalize that value. And so that's where the application-specific sequencing comes from, which is kind of at least the way that they want to implement it downstream of multiple concurrent leaders.
Yes.
So that's concretely the thing at a protocol level. that people like Max and Tolly have obviously been talking about for a long time.
Right.
Because that is particularly now really a path to getting that, which would be super, super helpful.
So, okay, so that's Solana. That's kind of this entire staking ecosystem. The other phenomenon that's been happening is like over the last 18 months, there's been an abundance of new chains. And we've had a ton of different specialized chains. Hyperliquid obviously is dominating in a lot of ways in that specific use case, new general purpose L1s. But like what's happening more than ever is like a consolidation process, kind of like monolithic, modular. Oh, maybe we got to go back closer to like just a couple chains. How are you seeing the multi-chain, let's just put it that way, landscape now? Like, how are you seeing the power law play out from a mind share, transactions, users, etc.? And I'm like, how do you think that that's going to keep playing out in the future? Are we going to have this continue to kind of like crunch and just have a couple big winners? Are the breakout chains not yet launched? Like, we've seen this kind of go and kind of ebb and flow. Where are we at now?
I think what we're seeing right now is probably going to hold for at least quite a while, where you have this power law of general purpose chains.
Yeah.
Where I think the vast majority of applications that are launching today are best served by launching on top of some existing general purpose chain.
Yeah.
And then depending on what your need is, that will tell you which chain it is. So a lot of simple old school DeFi protocols that aren't like super trading oriented and low latency trading and just need access to a lot of capital, some of them do still make sense to launch first on Ethereum. Like I was talking to a protocol today that was like their early stage. They're going to launch on Ethereum first because it's not a trading oriented thing. They just need access to a certain large pool of capital. Same thing with like Athena was a perfect example. The last cycle makes sense. If you're building something like that, you're going to go launch on Ethereum. You don't need your own chain, at least to start. You just want access to a lot of capital and infrastructure that works. For most trading and consumer oriented stuff, again, where you don't really need your own chain for the vast majority of it, just go launch it on Solana. And that's where in practice we're seeing most of that stuff today. So like most interesting new consumer-oriented applications, early stage, just go launch on Solana. It works.
Yeah.
And then you're going to get a tail that will disperse to other places for a variety of needs, whether that's Monad, like if you want, EVM compatibility. If, certain will complete on like even lower latency for like certain niche use cases. The vast majority just don't need their own chain, though, at least to start. There are like obvious exceptions with Hyperliquid and stuff like that. But most applications just starting off, it's a high lift to make and run your own chain. That's just like usually unnecessary.
Yeah.
Where you lose out on the distribution. I think for most of them, that will be like a later stage conversation for most of the really successful ones, unless you like really need certain customizations to start. Like Hyperliquid obviously benefited from having their own chain from the start. But I don't think that's indicative of most things that we're seeing, at least.
All right, last one for you. I put out a tweet several weeks back, kind of a meme, and I got absolutely just clobbered for it, which was, how long do you think the revenue meta is going to last? And I actually had Hasib on, like, the 2 people prior, and he was actually like, look, man, I think you got clobbered, but unfairly so. Here's why. Because
I think your point was right.
The people that were...
Depending on how you meant that.
Yeah, the people who are focusing right now on revenue, everything, are effectively saying that the current amount of adoption that we have today is the end, and that you need to be fully maximizing for what that is now, and that you're not even thinking about projecting into the future. And so that's all that matters. And so that the people that were angry were kind of we're thinking too closely into like the here and now and not forward. Now, I may or may not have meant that. It may have just been pure troll rage bait, but
it was very good.
I'm curious what you think. Like, do you agree with Hasib? Do you think that like he has a point? What's your thoughts? Like, there's been such an emphasis on revenue for the last like month or two. Where do we go from here into the future?
Yeah. So I guess I would broadly bucket it as like 3 camps where people are right now. One is, I would say there's a group of people who don't think that you need to make money for a lot of projects in a long-term state, where they will make the argument that for assets, particularly large L1 platforms like ETH, Sol, whatever, that you don't need to be, charging a bunch of fees, REV in the long run. Like, it's totally fine. The value of this thing will come as it's a commodity money-like thing. That's like one camp, and that's one that I've like largely argued against. I think there's like rare exceptions to that, like Bitcoin obviously is. I don't think that applies to most other assets. So that's like one camp that I would say is anti the revenue meta, in the sense that a lot of people like me will say, hey, this is important like for Sol to generate a bunch of REV. So that's like one to argue against. And then, yeah, that middle camp is where I think most people actually are today, which is like what I describe as really the revenue meta of it's just now an over fixation on like go to DeFi Llama and sort by like what is the revenue number today, and like okay, so we put like a multiple on this, and that's just completely wrong.
I agree.
Like that literally just doesn't make any sense, for multiple reasons. One being that simple fact of most people just aren't like doing the like even one step further analysis of, okay, but like literally a snapshot today doesn't mean anything. What actually matters is in any kind of like DCF valuation, it's like, what money am I going to make in the future? And so if you just have shit revenue quality and it's just going to go down, well, that is not a better thing to hold than the thing which has zero revenue today, but I think is going to $1,000x tomorrow. Well, then the thing that's actually has no revenue today is the better like cash flow bet. And so people like just have a really hard time grasping, I think, particularly these kind of just exponential leaps in crypto, where it can be very rational as a cash flow and based investor to prefer an asset which has absolutely no cash flow today, because I think that it's going to 1,000, 10,000x in the amount of cash flows that it's going to get in the future. 100%. And that's how like all early stage investing works.
How all equity investing works.
Exactly. And like people just have a really hard time getting their heads around that. I think particularly because crypto people we haven't thought about revenue and cash flows for a long time. But I mean, the very simple, once you dig one level deeper onto it, is like most of the tokens that people are valuing is like, oh, this is value because of cash flows, revenue today. Like, look at the numbers. They don't actually like make sense on any reasonable valuation basis.
I know.
Like one of the like I would say one of the most emblematic ones of it today is like Sierra. Maple, which I think is like a great protocol. I think it's like a really cool idea. I think it's like future growth, but everyone is basing it off of like, you know, everyone was like, oh, they're making so much revenue today, like compared to all these other applications. That's why it should be valuable. If you just like look at what the multiple valuations on these things are today, it's like, all right, the thing is making like 10 mil in revenue and spending like a little under 10 mil a year. It's like maybe like making $1 million a year in profit. So like a 600 PE multiple is like it's not a reasonable valuation. Even there, you're doing this, you know, like, okay, the bet is that we think this thing is going to grow 100x in the future. Like, sure, it makes sense. But yeah, way too many people are just taking this simplistic look of like, what is the number today, and then project this forward.
It's really like looking backwards instead of looking forwards, which all investing is really always looking forward.
Exactly. And so that's what I think is going to die out at some point as the like revenue meta right now, where we're going to just get past this overfixation where it's like crypto people just discovered revenue again, and they're like, wow, this is like an amazing thing. How did we like not look at this before? And they're like, this is all we need to look at now. And then we're going to go back to this middle ground where it's like, no, a lot of the infrastructure stuff will, for example, make sense. It is just that for some of it, it may not generate cash flows today. What you need to be making a reasonable argument for all these is, what are the cash flows that it's going to generate in the future? Because like that's what's actually going to matter. And for a lot of it, it won't matter. For a lot of it, like it won't capture value. Like I think the future that we're going to head towards is 95% or whatever the value is going to go to applications. Like I do think that is going to be the general trend, but that doesn't mean that you can't have like any infrastructure winners, for example. Like if Solana is the platform that just most stuff is built on top of, even if it's just squeezing out 5% margins at the end of the day on a huge FI, like that could be many billions of dollars per year. And that could be a super valuable thing. So
Innovating finance, global, institutional, and on-chain. Deep liquidity to drive capital efficiency. Now maximize yield on institutional grade liquid staking with METH. Unlock $1 trillion of capital via Bitcoin. All of this secured by Mantle's treasury of billions in stables and ETH capital pools. This entire ecosystem is coordinated by a vast network of seasoned VCs that are aiming to create the next generation of banking and financial technology. This is Mantle.
Introducing SummerFi, one of DeFi's oldest and most battle-tested platforms. SummerFi automates your exposure to DeFi's highest quality yield so you can sit back and enjoy this summer. Deposit stablecoins like USDC or USDT and let SummerFi route your funds into optimized, low-risk lending strategies. With over 100 million in instant liquidity and support for over 34 protocols across Ethereum, Arbitrum, and more, you always stay in control. Choose from a wide range of curated strategies reviewed by independent risk experts, all in just a few clicks. So why work hard for your yield when you can be lazy? Start earning now at Summer.fi, the home of the lazy summer protocol.
Last thing for you, actually, that crypto Twitter has recently discovered is CLOBs. We've recently realized that CLOBs exist. So shout out to crypto Twitter. And my question to you is, do you think that there is a specific infrastructure architecture that is ideal for CLOBs? I think there's like 4 options, more or less. You got like a hyperliquid, like a L1, basically that's an app chain L1, app L1. You got a general purpose L1, like a monad with like a Kuru or something. You've got like a general purpose L2, like a mega ETH, super high throughput. Again, these all kind of converge in some ways. And then like a custom specific L2 app chain for a CLOB. Like, is there a infrastructure that you find to be ideal somewhere in the middle? Like, kind of what's your thoughts here?
I don't think there's any ideal one. I do think there are trade-offs to all of them.
Yeah.
I think a lot of it comes down to what is the best in practice today.
Yeah.
Because I think there's a good argument that if you take the Solana end vision,
Yeah.
which is we're doing 1 million TPS and we have like effectively instant blocks, instant finality, we have multiple current leaders, we have app-specific sequencing, we have like all these, fancy things. There's no reason for you to need your own chain.
Yeah.
That like might be true in the ideal state.
Yeah.
But we obviously don't live there today, and that's like probably years away. So in practice, in the real world, if you want to launch the best thing today,
Yeah.
you need your own chain to do it. And right now that's Hyperliquid. I'd say like without a doubt, that is obviously just like the best application and just implementation of this today that people just like love using. It works really well.
Yeah.
In general, the way that it is easiest to launch a thing is going to be just what's the most centralized version of it.
Yeah. Like what's the fastest, most centralized version?
Exactly. And so, I mean, Hyperliquid basically just went max
I
centralized.
looked at Solana, I was like, nah, fuck you, man. I'm going to do way better than that.
Exactly. And like, they basically just went max centralized, particularly at the start.
Yeah.
And they're like progressively decentralizing now. I mean, when they started, it was 4 nodes all ran by the team.
Yeah.
Obviously. And like now it's, it's 16, but they're all co-located. One, still
Each region, right?
Yeah, still the foundation has super majority stake, but like, okay, like this will hopefully broaden out over time. In general, the easiest way to do things today is just start super centralized. And so in practice, like usually the easiest way to do that today is just by launching some sort of L2. There's like a lot of frameworks and stuff to build that. And I mean, the other part of it is that obviously just like with launching if you actually have real decentralization and proofs along with the thing, that allows you to keep the thing super centralized while having actual like security fallbacks.
Exactly.
Where I like people hand wave it away, but I do think the bridge security risks on Hyperliquid like actually matter today. I would put a different amount of money on the chain.
Yeah, man.
If I had 0 security risks with it.
Scary, actually.
Like they can clearly overcome it because it's the best product that there is today, but I don't think it's reasonable to say that like this wouldn't be a better product if people had like 0 security risks about the bridge. I had 100% certainty that like, hey, I could just withdraw all my money. There's nothing that they could do to censor or shut down the bridge or like anything like that. Like I would put more money on it. And I think that like on the margin that does matter, and
100% does.
And so it like that is the way that if you're going to have like completely centralized operations with a Rollup, that's the way you're going to get that.
Yep.
The tough part is that this again is like what exists in practice versus today. In practice, most of the rollups today don't actually give you those guarantees that I just described.
And they're slower or whatever it is, right?
Exactly.
And less efficient.
And so I think Hyperliquid took the correct route of saying like, hey, in practice, most of this rollup stuff is also an ideal end state that's going to give you perfect security guarantees.
Yeah.
Today in practice, most of them are still, it's a security council. You're taking security questions with them. You're taking some trust. And so they said, all right, we're just going to ship an L1 with a few validators and like, it'll work.
Yeah.
I think that was the right trade-off today. But I think that what the right trade-off is, just it will evolve over time. It may be implementing more of like a ZK bridge kind of thing. If that tech just becomes commoditized, then Hyperliquid should just like slap it on there. That's what they should use. If it becomes a general purpose chain and Solana is like the thing in 5 years once it's an ideal end state, then like, sure, you should just launch there.
Tuesday.
So the infrastructure is just going to keep evolving, and applications just need to at any given time to say like, what's the infrastructure that's going to give me the best experience for my users right now?
Yep.
Right now it's Hyperliquid. Tomorrow it might be something else.
John, I appreciate your time. I know it's been a busy week for you.
Yeah.
Thanks for the chat, and we'll see you soon.
Yeah. So I'm everybody. We'll see you around.
Cheers, man.